everything changes.
Hey, what's up everybody? Welcome into the channel. Thank you for joining me. Today is Tuesday, September 8th, 2020. And one of the most asked questions I get on this channel, absolutely nonstop since I began this channel 5 years ago, is how to keep track of your inventory for eBay or Poshmark or Amazon or really anywhere. And there are three good answers to this question. I have covered them in videos I made about Microsoft Excel or Google Sheets in the past. But I really think some people had some difficulty understanding at least one of the methods, sometimes two of the methods. So I want to do a really good breakdown, and I'm going to put myself down in the corner of this video while I make it, and I'm going to record a screen share, and I'm going to show you all three methods. And so the three methods we're going to talk about are line by line itemization. And that means tracking every single item that you buy, line by line by line, item by item by item, assigning it a SKU or its own unique identifying number, and then tracking the cost of that all the way down so you know what you paid for it. And then when you sell it, you can move it from the cost of inventory to the cost of goods sold. That's number one. It's really the most accurate, but it's also the most time consuming. So keep that in mind because time is money, right? And so we have to find good ways to do things. The second way is cost averaging. So it's similar to the first one, but when you buy stuff, you're going to keep track of the quantities that you buy. You're going to spread the cost out among those items, and you're going to have an average cost of goods. So you know that if you bought 100 items for $2 a piece, you spent $200, that's an inventory. And then if you sell 10 of those, that's $20. So you now have $180 worth of cost still in inventory and $20 worth of your cost of goods sold. I'll explain that when I get into this. The third way is total inventory cost into cost of goods sold, and the rest of your inventory is zero. And so I like to call this the zero inventory end of year method. A lot of people don't understand this. A lot of people don't like it. The IRS approves it. It's good. I've talked to multiple CPAs about it. It is the fastest, easiest way. It is the least accurate way, but it is accurate. And what I mean by the least accurate is that it's not going to give you a breakdown item by item, but it is going to give you the correct total that you spent and that went out cost of goods sold at the end of the year. So those are the three ways that we're going to talk about it. Now, how to use programs to track these. Google Sheets or Microsoft Excel is free either way, and it obviously is going to be that you have to manually type all this in, and it's a really great way to start for all of you that are small, all of you that are just getting going. It is your best route. QuickBooks has an inventory option. Now I use QuickBooks Online Simple Start. It really doesn't have a great inventory tracker because I use QuickBooks to track my accounting and my numbers, not my inventory. And since I do the third method, it's really not that important. I don't need to track items item by item by item. If you're tracking items item by item by item, you need to use a different version of QuickBooks. I believe it's the Deluxe or the Premium Edition, Desktop Edition, that has inventory things inside of it. My QuickBooks Simple Start Online really does not. It has one, but it's not good, so that wouldn't be the one you want to use. I'm not sure on GoDaddy. I have never used GoDaddy. Somebody can chime in. I don't think GoDaddy is going to track items item by item by item by item unless you sit and manually put all that in. It'd be a lot of work. It'd be no different than doing it on Excel or Google Sheets. There are inventory programs out there. Magento has one. Labs has one. There's a bunch of them. I'm not going to name them because there's probably 1,000. You can Google them up. There's free ones which do basics. There's ones for $20 and $30 and $50 and $100 a month. And there's ones for thousands of dollars a month. So you really just have to look around on the net if you want to use a third-party one. I don't think it's necessary. And for that reason, I'm going to show you how to use QuickBooks or a Google Sheet to do any one of the three methods that we mentioned. So with that said, let's jump over to my screen. I'll screen share and I'll talk to you guys about those three methods, and then you can decide what's best for you. Of course, always seek financial and legal advice from a CPA. I am not one. I'm just giving you the methods that I use or that I know how to use, and then you are free to do as you please. Let's jump into it. Okay, so I brought you over to my computer screen, and hopefully you guys have experience with Google Sheets. If you don't, just You can do a Google search for Google Sheets and it will show up. This is exactly the same as you would find on a Microsoft Excel. If you have that, you can use that as well. If you don't have a computer that has Excel on it, this is a great alternative. You just go to the website, log in with your Gmail, and you have access to Google Sheets anywhere in the world. In fact, I like this one better because A, it's available anywhere, even if I don't have my computer, and B, you can share this with the share button over on the right to anybody's email, so you can have other people look at it, employees, business partners, help, people like me, things like that. So the first thing you can do is just come up here and rename it. You can call it accounting or whatever you have. Basic Excel and Google Sheets, renaming, file, edit, all the different controls, your different sheets at the bottom, things like that. So I'm just going to show you what you would do for formulas and what you would do for rows. So number one, the first thing I'm going to do is purchases, right? So I'm going to put in the date of purchase. Let's just say we're going to use September. We're a few days into September, but we're just going to do like 9/1. And so what happens is you have your date, and then what I like to do is put the item purchased. And this is going to be method number one, of course, if you're a line-by-line item tracking. So item purchase, let's just say we bought a Nike men's t-shirt, green, extra large, right? Now, the problem is when you're buying clothes or even some other games, you may buy items that are similar. You might buy multiple Nike men's green t-shirts. So that's when we have our SKU line. That's how we track our items individually. We may name this one A001, right? And then A002, A003 for the next items. And that way you know exactly what items sold, the accounting for it. It also is good for your tracking on your inventory. When you're storing in your garage or in your shed or wherever you store it, you can label it with that SKU number. You can also put this SKU into lines like eBay or Amazon, and then you can identify it on the platform. So really good to do that, especially if you're doing individual line item tracking. Okay, so then some of you may want to track where you bought it from, and that's okay. You don't have to. I don't really see an upside. But let's just say you bought it at Goodwill. And so that's going to be your other line. Now, we of course want to know the purchase price, right? And the purchase price is what is our inventory amount. And so let's say you paid $2 for it, okay? So we paid $2 for this, and it's in inventory as a $2 cost. So currently, if this is all you own, sitting on your shelf, listed, unlisted, whatever it is, it's $2 worth of inventory. So a lot of you like to put the purchase price, but you may want to put a little slash that says inventory just to remind you that is the total that you currently have in stock in inventory. And you can do a sum, and you can run the sum all the way down till eternity, and it will tell you the total that you have in inventory. And so that is really what you would want for your purchase if you're tracking item by item. Now let's say you also bought that day a Lily dress. I'm not going to write it out. Lily Pulitzer. You bought that at Salvation Army, and you paid $4 for that. And then finally on that day, you bought a pair of Clark's wedges. I don't know, just making this stuff up. And you bought that from a yard sale, right? And you paid $3 for those. And so now you have $9 worth of inventory that you spent. You spent $9, right? Okay. And of course, keep your receipts. If you have a yard sale, make your own receipt, handwrite it, buy an invoice book from Walmart, whatever you have to do. Now, when you're ready to sell these items, you're going to come over here, and you're going to have a date, and you're going to have a sale price. Okay, leave a column, and I'll tell you why we're going to leave a column free in just a minute. So let's say a couple days later, you list these, and a couple days later on 9/3, you sell those green Nike t-shirt for $20, and you can put the platform that you sold it on, right? You can just put eBay. And then next to it, you could put the eBay fee, which is now mixed with managed payment, so it should all be one fee. Let's just say it's $3. I don't know what it is. I'm making these numbers up completely. And you sold it for $20 plus shipping. So this is always the sale price plus shipping. It's all one transaction, guys. Don't separate it out. It's silly to do that. It's all one number. So just keep that in mind. 20 free shipping or 20 plus, or 15 plus 5 shipping. It's all $20. So then your shipping label. Now this is what you have to buy. Even though you were paid for shipping, let's say you did 15 plus 5. You're still going to buy a label, and this is going to be an expense you have to track. Let's say it's $4 for the label. Okay, we want to total these up at the top. And just like we did, again, if you don't know how to use Excel or Google Sheets to do totals and sums, you definitely need to watch some videos on that. But there you go. So we know that we paid $3 for the fee, $4 for the label. We're on managed payments now. Maybe you are, maybe you aren't. If you aren't, then you'll want to add a column for PayPal. but now we know what we paid to get rid of this item. And so our net, our in pocket here, is going to be the $20 we were paid by the customer minus the 3 minus the 4. And so we actually, whoops, I put that in the wrong box, my fault. Let's do that again. Sum of the 20 minus the 3 minus the 4 gives us a $13. We spent 7 on a label and a fee. And so we're left with $13, right? And of course, we know that we spent $2 on that. So our actual profit is going to be what we were left with minus the purchase price. And so we made $11 profit on that shirt. Okay? And so perfect. So now we know exactly, whoops, what we are working with here. We know our numbers. And there we go, $11 profit. Okay? So then we can also do the total of our sales minus, whoops, minus that. Okay, and there we go. We want to make sure you always total up the top column if you can remember to. And there we go. So we have $11 total profit for the business. I always like to color code them. I'll make it green or whatever. Now, this column that we skipped, we need to make this a cost of goods sold. Now, what does that mean? That means what did the items that you actually sold cost? So how do you figure that out? Well, that's very easy. We spent $9 on inventory, and we sold a shirt that has a $2 cost, right? And so our cost of goods sold is going to be the $2 on the green shirt. And then we need to have another column, which you can insert, that's going to be remaining inventory costs. So how do we figure that one out? Well, that's very easy as well. We know we spent 9. Our cost of goods sold is 2. So our remaining inventory is going to be the sum of your total spent minus your cost of goods sold. And your cost of goods sold right now is $2 because that is what the Nike men's shirt cost us. So 9 minus 2 equals 7. And we now know that we have a remaining inventory of $7. Pretty easy now, but once you have hundreds of items, you're going to want to track that. And you have a cost of goods sold of $2. Now, of course, every time you sell an item, make sure you do input that cost of goods sold right next to the inventory. That way it does the math for you. Also, the remaining inventory cost on that item would be just the sum of, the sum of what you paid for it minus cost of goods. It should always be 0 over here, which it's giving us a weird number here, but it should always be 0 because once you have the cost of goods sold at $2, the remaining inventory is 0, and that's how we get the 9 minus 2 equals 7. It's totaling it up. And that's pretty much all that you have to do as soon as an item sells. Put the cost of goods sold. It should equal out to 0 if you do the sum, because we're going to come down here and stretch it out as far as we can. And you're all set. So now you have your total inventory, you have your cost of goods sold, and you have the remaining inventory. And over here you have your total sales, your total fees, your total shipping label cost, your total nets, and your total profits. Now the third thing that you'll need to do is over here I do expenses, which you can do date, name of expense. You want the category of the expense. And this is important, and I'll tell you why in just a second. And then you want the amount or the total or whatever you want to call it, right? This is the amount spent. Okay, so on these ones, you're going to do something like, let's say, name of expense bubble wrap. Love to use bubble wrap. Now the category, this is supplies, and the amount spent, $20, right? Now, the reason that the category is important is because when you do your expenses for taxes, you have to have them separated into categories. So for example, bubble wrap is a supply. Let's say you went to eBay Open on this day and you bought a plane ticket to get there. Now that's travel, right? So the category for that is travel. I think it's called travel and lodging. Say you spent $220 on that one, right? And then let's say while you're at eBay Open, you bought a training class from me off the internet. So that's training. And say you bought the training package for 2020. So every single thing has its own category. For example, if you bought a new camera to take photos with, that would be equipment. Supplies are things that you use up. Equipment is things that you keep and you depreciate. That's $400, right? And so that's what you're going to want to keep track of over here. You can also keep track of like an email server, website, cell phone, et cetera, et cetera. Again, things to talk about with your CPA. I'm only doing the inventory tracking, not getting into the accounting side of this. Also, over here, maybe your eBay store fee could be, an additional fee because here we're only tracking the final value or insertion fees. Over here, you'd have an eBay store fee, and that is called dues and subscriptions. And I don't know what level you guys have. Most of you have the $59.95 premium, and so there you go. And that's how we do item by item tracking for our inventory, every single item, every time it sells. So of course, that's pretty crazy. Now, if you want to do cost averaging, it's almost the same, so I'm not going to change these expenses. They're going to stay there. Again, your sold price when you sell it over here is probably going to all be the same because you're still going to have the same, profits and all that. The only thing that's going to change with cost of goods averaging is what you're going to do over here. So let's go ahead and get rid of these items that we purchased, and let's get rid of their purchase price and cost of goods sold, right? And let's go ahead and get rid of that real quick. This should be the total. Mess that up. Again, basic Excel, which I messed up, obviously. Okay, so over here, what you would do is, let's say the same date, you purchased 6 items from Goodwill, and you would have to put in 6 clothing items, or whatever it was, right? And then your SKU, because you're doing cost averaging, you may still want to track items by SKU when you put them on eBay and Amazon to find them, but you're not going to track them for accounting purposes, so it doesn't matter. And let's say you bought those 6 clothing items at the Goodwill, and let's say it cost you $33, right? Okay, so now we have to add another tab that's going to say average purchase price, right? So average purchase price. And so down here, we're going to do a formula of the sum of your $33 divided by 6. It's $5.50 per piece, right? And so that is where you have to try to keep account. So instead of SKU, I do number of items bought, which is 6 items, right? And so you could actually do the sum of the 33 divided by that column, and you'll come out to 550. Again, you want to total these at the top so that you can get a total number. Again, Excel 101, if you don't know how to do it, look up some videos. So let's go ahead and do the same thing here, the sum. Whoops, go back. So we want to do the top layer, the sum of our 33 divided by 6, and we get a $5.50 cost of goods purchase price average, right? So now, let's say that you come over here and you sold one of those items for $20. Well, the cost of goods sold on this item is going to be $5.50 because every single item that you bought cost you $5.50 no matter how it broke down. So our cost of goods sold would be $5.50. You will have to type in every single time you sell an item, you will have to know what the average cost of goods sold was. Or what I do is, let's say tomorrow you went and you bought 10 clothing items from a yard sale and you paid $40. So let's do $20. So we know that they are now $2 a piece, right? You can scroll that down. Don't worry about these errors. So $2 a piece. Our new cost of goods average is $3.31 per item, right? So every single item that's sold will be $3.31. So what you'll do is you'll insert another column, total number of items sold. So we've sold one item, right? And so we're going to put that in, and our cost of goods sold now becomes the total average times the number of items we've sold. Currently, of course, $3.31. But if we come over here and we were to sell another shirt for $40 on Amazon, I don't know, somewhere, and we just fill out our normal fees, $6 label, things like that, then we would be at $30, and our profit would be, of course, what did I do wrong there? Why did I get a negative 20? Oh, because we've changed the cost of goods. So since the cost of goods is now $3.31, your profit is going to be, you're going to take the net minus the average cost of goods, and that's going to show you exactly how much money you've made on each and every item as you go down the list, because here we go with our net, and it's our net minus our average purchase price. We made $26.69 on that one, and we made $9.69 on the first one. Does everybody see kind of how I did that? Hopefully you do. If you don't, then you definitely have to do some Excel basics. So we figured out a $40 sale minus our fee and shipping label is 30, and 30 minus the average purchase price gives us a $26.69 profit on that particular item. Now, over here, remember, we've now sold 2 items, so our cost of goods sold is $6.63, and our inventory cost changes to $46.38. Our total purchase was $53. We're subtracting our cost of goods sold, and we're getting to our remaining inventory. So cost averaging, a little bit more work, a little harder, not as accurate, not a big fan of it. So let's talk about the third way that we'll do it. I'll cut this, and I'll start back again for our third method. Okay, for the third method, I've gone ahead and cleared everything. Again, the expenses, they kind of all stay the same. Over here, we'll have the date, items sold, and all that. Here, we're gonna do the date, and we're gonna do the purchase, and you can put the store, and then we're gonna put the purchase price, right? Oops, can't spell. Purchase price. Okay, now here's how this is gonna work. Pay close attention here. So on September 1st, we bought, some mixed clothing items. Who even cares how many? From the Goodwill. And then we paid $32, right? $32. So we're going to go ahead and total all of this up. And we'll know exactly what we paid for the purchase price. Now, again, I don't have an average cost of goods here. I don't have a SKU line. I don't have any of that because we're not worried about that right now. And so we're going to have a column that's going to say remaining inventory. And then we're going to have a column that says cost of goods sold. So you're going to need both of those categories, or both of those rows right there. And so what we're going to do is every time that you sell an item, no matter what it is, so we're going to come over here and go, let's say 9/2 we sold an item, right? And we're just going to say that same green Nike shirt. And we're going to say we sold it for $20. And we're going to say we sold it on eBay. That's fine. The eBay fees were $3. The shipping label was $4. We made a $13 net. We're going to assign this shirt its own cost of goods sold, right? So we're going to say cost of goods sold. And since we know that we made 13 in our pocket, we're just going to say we paid $3 for it, right? And then our profit, of course, is going to be 13 minus 3. We made 10 bucks. So over here on the cost of goods sold, we're going to have basically the same number that we have over here is 3. And so we just will transfer this cost of goods over here when we do it. But our remaining inventory is going to be the sum of what we've paid minus the cost of goods sold. And that's going to leave us $29. In fact, we don't even really need this because we already have this column there. We can delete that. That's fine. Delete this one too. Okay, so I assigned $3 to this item. Now let's say tomorrow I'm able to sell a Harley jacket that we got. We did really good on the jacket. We got 50 bucks for it, and we sold it on eBay as well. It was $6 in fees, and it was $12 to ship, and we made 32 bucks. I can assign it any cost of goods sold that I want. We still have $29 worth of cost of goods in inventory. So I'm going to go ahead and assign this one 15 bucks, right? And again, you're going to just drag this down. The profit on that is 17. So now our cost of goods sold is up to 18, and that puts our remaining inventory at 14. So let's say that later that day we sell a really cool pair of Adidas cleats that we got out of that same lot, and we do well on those, and we get 40 for those, and we sell those on Mercari. I don't know where you guys sell. The Mercari fee, I don't know what it is, but let's just say it's 3 bucks, and the shipping label is $9. And we got 28 in pocket, so let's go ahead and give it a $14 cost of goods. Now, our purchase price is still $32, what we paid, but we have nothing left in inventory. If the next morning we're able to sell a J. Jill dress for $25 on Poshmark, and there's, this could be the Poshmark fee as well, so it's $5 fee. There's no shipping label because the buyer paid. And our cost of goods sold is 0. Why? Because we don't have any amount of money to assign to it anymore because we've used it all up. But if before we made that sale, we went out the morning of 9/4 and we bought some more mixed clothing. We bought those from a yard sale and we spent $22. We now have remaining inventory of $22. So we could assign the J Drill dress $2 or $8 or whatever we want. And the essential task of this is to assign all of the cost of the inventory into all of your items as quickly as you can to make this number 0. If the next day after we bought that yard sale, we sold some Wolverine boots, we did amazingly well on those and got $90 on eBay because they were awesome. And we paid $10 for the fee and we paid, $15 to ship them. We made $65. So we're going to assign, we've only got $14 in inventory remaining. We're going to assign the $14 to them. And now we're at 0 again. You guys see that? And so this shows you the profit breakdown of each item. Made 51 bucks on the boots, but you guys can see how I'm assigning the cost of goods sold, which is $54 in inventory, as quickly as I can to these items. I put as much as I can into those. So essentially at the end of the year, my remaining inventory is always going to be 0. And whatever amount I total spent on everything is always going to be what my cost of goods sold is. And so I'm zeroing it out and I'm assigning all of the cost into everything that I sell. Whatever's left at the end of the year will have a 0 cost. Now, why is that allowed? Because next year when I sell it, it's got a 0 cost still, and I'm going to pay all the taxes on 100% of the profit, because if I sell it for 20 net, it's a 20 profit because it has 0 cost. And so that's how I like to do things. This is totally allowed. Again, checked with accountants, checked with CPAs and IRS and stuff. This is 0 costing because the IRS is going to get their tax money, whether it's into these items or into the other ones at 100% margin. So either way you break it down, it's going to work out for them. It's going to work out for you. This is basically just kind of stretching it out, if that makes sense. So some of you may understand this. If you don't, that's okay. This is kind of a complicated way to do it. I love it because it makes it really easy. I know that my remaining inventory is always $0 at the end of the year. And whatever I've spent, so I can just total up all my receipts, that's my cost of goods sold. So hopefully you understand this and you can enjoy this. This is how you track what you have left in cost for inventory and cost of goods sold. This method and the cost averaging will not track every single item line by line by line. That's only the first method. But remember, that takes a boatload of time and a boatload of effort. So just weigh your time versus what it's worth to you, what the money is worth, and decide how you're going to go about it. Talk to a CPA as always. Show them this video if you want. If there's anybody you know in the reselling world, show them this video, share this video. Let them know that there are ways to keep track of things accurately, and hopefully this all makes sense. The expenses really never changes. And again, you can use QuickBooks or GoDaddy to track all of this and to track all of your sales. As far as tracking the inventory, I always recommend that you keep this on a spreadsheet because that's what I do. So there's your 3 methods of inventory tracking and accounting, Google Sheets or QuickBooks, whichever you choose. If you have questions, comments, concerns, put it down below. Let me know what method you use and why, what program or softwares you use. If you have an inventory software that you want to recommend for other people, feel free to put it down there below and let them know, especially if it's other than QuickBooks or GoDaddy, which are the 2 that I have mentioned here. All right, like this video, make sure you subscribe if you need more help with your business or want to do better and make more money. Watch the future videos for more updates. And as always, thank you guys for watching, and I will see you next time.